Good morning, everyone. How are we doing today? Exciting day for me. It's gonna be interesting here in about 30 minutes or so. If you don't know, after this live financial news, we are going to do a YouTube live stream answering your real estate or your investing questions. I agreed to do this after all of you stepped up on Wednesday. Wednesday during the daily financial news, I asked for a thumbs up, comments, questions. And again, you all blew me away. Over 150 thumbs up. I've never seen that before on any video. I don't normally ask for it because I don't understand it. But I need to follow what Graham, Stephan, and the like do. So smash that, like button or thumbs up or whatever it is. But I'm pretty excited. We've got a long list of questions that were pre-seeded or already sent to me. We're going to answer all of them. We're going to spend up to an hour because at 9 o'clock my time or Pacific time, I need to get on the Facebook live stream with the students of my course. And that's something I do every Saturday. So we are time bound. We're going to start at 8 on YouTube, answer all of your questions. I will use the entire hour. I got my alarm set to tell me when I need to finish. And then I'm going to go talk to my students at 9 o'clock. So I'm going to have I really hope this is a positive experience and fun for everyone. So without further ado, let's talk about the financial news this Saturday, June 13th. Well, the longer you do this, you still get surprised. It looks like Hertz, who is in bankruptcy, has gotten approval to sell up to $1 billion of common stock. This is very unusual, and this is going to be an interesting experiment. If you don't know, typically speaking, when a company goes bankrupt, their common stock becomes worthless, and because the debt and all the lenders, they take whatever equity is left. Well, it looks like Hertz has become a favorite of some. I don't want to call them investors. That's insulting to the word investors. Let's call them day traders, momentum players. Seen their stock go under $1 all the way up to $5. Now I think it's trading at $2.50, something of that nature. And Hertz is like, hey, if people want our stock, give us approval to sell some more. Don't buy it. They're just, I've never seen this before. And it'll be interesting to see if that extra supply puts a damper on it because it is pretty clear in their filing with the bankruptcy judge that they think it's worthless, but they're like, hey, an extra $1 billion would help us get through bankruptcy. So, but again, there's other players, Chesapeake Energy, another one. And there's a lot of kind of momentum going on. I go back to that day trader calling Warren Buffett an idiot. I think that was Wednesday. I think I did that Wednesday afternoon because I was so shocked by it. And then, of course, Thursday's collapse. So be careful what you wish for. It is very clear, I think. I saw it in Friday's trading, and I don't know this for sure. And I talked about it in the morning. I think what's going to happen until it doesn't work anymore is the smart money is going to come in and buy these stocks early in the morning, pre-hours. It's going to cause an uptick on very light volume. So all these Robinhood screens go green and show double-digit increases. Then all the retail investors are going to flood the market through lunchtime, and then the pros will get out by 1 o'clock Eastern. And that's if you look at Friday's session, it took off like a rocket at the open. At least the S&P and NASDAQ eventually went all the way down, traded slightly negative, and then came back slightly positive into the end of the day. So I think that trading pattern is going to keep working until it doesn't work. And the smart money, the hedge funds, quick money, whatever you want to call it, are going to start taking advantage of the gamblers. So be careful. Another thing I saw, and I say I have to agree with, is I don't know about you and your Facebook page. So first and foremost, let's be clear. I did not have a Facebook page until I left the workforce, right? I didn't get it, right? I'm an old person. I didn't get it. But once I left the workforce, I needed a way to keep up to date with friends. It seemed like the right thing to do, so I joined it. And generally speaking, Facebook, at least my experience, up until the last month has been generally positive, right? People are generally putting out cool stuff, right? Celebrations and this and that. And generally, I would leave Facebook happier than when I got there. The last month, maybe the last 6 weeks, I don't know what has happened, but my Facebook feed has become negative. I am getting very close to just, I don't know if deleting the account or stop looking at it, or how do you start over, right? I don't know. Should I just erase everybody and start over? I don't know, but it is gone from, you know, I don't know, 90% good to 10% bad to 80-20 the other way. I don't go to it as much anymore because there's just so much hate, misunderstanding, just trolls. It's not a safe place if you want to go get feel good anymore. So I don't know. Maybe that's just me. Tell you about next week. We got, a full slate of financial news coming that we'll be talking about real quick. Monday is Empire Manufacturing, basically telling us what's going on in New York, a big hub for manufacturing. You have Lennar and Oracle. Lennar is a housing builder, and Oracle announcements on Tuesday. I think Lennar is in the morning and Oracle's in the after hours. So it'll be interesting what's going on there. You do have a Fed speech on Wednesday from Powell, which a lot of people blame Thursday's drop on Powell. So it'll be interesting to see if it has another dampening effect. You do have housing starts coming Wednesday as well. It'll be interesting to see if momentum with new construction is still there. I think it should be. So we will see what's going on. You have Thursday Kroger, right? Grocery stores. It is interesting, even in the grocery segment, which you would think is doing really well. There's winners and losers, and I don't actually know if I have a Kroger's near me, but based on the news I've read, they need to step up a little bit because they're losing market share. And then Friday will be CarMax. Interesting to see CarMax, right? The used car market is being flooded now, so it'll be interesting to see what is going on there. So that's going on with next week's kind of big economic news. I was looking at the last 4 or 5 months and realized we've had at least two events in the stock market that I guess need to be appreciated because we're going to be talking about them for decades to come. First and foremost, we had the fastest bear market ever, peak to trough. I think it was 17 or 18 days. Never had, the Great Recession was a slow, decline. And then we had the best 50-day rally ever. Both are interesting to look at, right? Not something you probably would have expected before either event. And it just goes to show you the Fed, in my opinion, has stepped up in a big way, big and unexpected way. They definitely got out and tried to get out in front of this with a big old bazooka or whatever you want to call it, and they just kept shooting. So we got to thank the Fed for that. I don't know about Thursday's drop. I see a lot of spin this morning about Thursday being about the second wave. I don't think that's true. I mean, first off, we could certainly have a second wave, so don't hear me say that. But what I hear in the spin is the drop was because people feared a second wave, and I didn't see that. I saw I saw movement in the highly leveraged small cap stocks get crushed. And then what I saw happen later in the day is it started taking down the bigger stocks. That felt like margin calls to me. If you don't know what a margin call is basically, hey, you bought on margin, you don't have enough there, you have to sell something, to get current. So it really felt more like margin calls to me. But again, I'm not in the data like that. But I just think that's this stupid press trying to scare people with the second wave conversations. Again, I'm not saying a second wave can't happen. I'm just saying it's a little early to be talking about that. Sotheby's auctions kind of surprised me. We all know that people are starting to buy, or at least look at houses without seeing them. But I saw people were spending over $2 million on some rare Ferraris without seeing them. I don't know about you, but that sounds dangerous, stupid, something idiotic. But again, I guess if you're buying a $2 million Ferrari, I guess you can risk it. I don't know. it's amazing what people will eventually settle for if they man, I don't know. That's just really, would you buy a car sight unseen, whether or not it's 2 grand or 20 grand or 200, let alone 2 million? I wouldn't. That's for darn sure. Man, that's crazy. Talk about these eviction moratoriums. Looks like we are starting to get lawsuits from the landlord side, basically saying, "Hey guys, did you forget about the Constitution? You can't break contracts between two parties." So we'll see what's going on there. I just have to say, you know, rent strikes, mortgage payments, all of that. Even if you delayed all of that, the landlords still lose. I mean, I can go back and look at the last 20 years, and about 50% roughly of all my expenses are non-mortgage related. It's property management, it's utilities, it's property taxes, it's insurance, it's capital, it's repairs. So if you're going to cancel rent, are you going to also cancel repairs and maintenance? And I mean, it is absolutely criminal what these, these particular governors and city leaders are doing. And I really hope these lawsuits go through and stop this behavior, right? We need to work with folks. And as you know, I have a couple of tenants that are struggling and we're working with them. But you can't just mandate and basically try to take over property. It's not allowed in the U.S. So I'm very glad to see that big landlords are stepping up and filing lawsuits and trying to get in front of this. So we will see. Another thing we saw is not only record borrowing by big companies, right? The Fed is stepping up and it's about $1 trillion at this point. But there was also $50 billion issued in new stock in May, whether it was IPOs or new issuance. Again, the window is open. New common stock hurts the shareholders. It doesn't hurt the balance sheet of companies, right? It's not debt. It's just more shares. So expect that to be continued. And if Hertz successfully sells $1 billion of worthless stock, you can bet that other bankrupt companies will just issue stock until people stop buying. Be careful. And then lastly, I was thinking about these last three events in my investing career: this health crisis, the Great Recession, and the dotcom crash. And if you've invested through one or two or all three of them like me, I think each of them had the opportunity to teach you something. So I thought I would share with you what I learned through each of them. This again is going to be my very personal learnings. I would ask you to take a moment to see if you have learned or anything. And the reason I'm doing this is because I think this health event is going to be one that changes consumer behavior. But first, I need to evaluate what myself and my family are doing to see if that's true and see if it's different than the other two events. So first off, the dot-com crash. If you don't know my story, I was a day trader and was successful until I wasn't. I then tried to get very safe. So I moved a big portion of my position to a company that was hot. It was called Enron. That did not work out well. I then took my lumps from that and moved what I had left into the safest thing I could think of, which at the time was phones. And I bought WorldCom. How is that for a double hit to the head? So I have realized that I will never play in the stock market again. Stocks are not for me. I will remember those scars forever. So when you hear me say I'm not a stock guy, you know why. So that very painful lesson will stick with me for the rest of my life. Even in these big runs from the bottom, you're up 40%. I congratulate you. I am not jumping on that bandwagon. My story, my situation, I will not be in the stock market. Now you know why. But that doesn't really affect consumers, right? Most people did not have that painful memory of jumping out of the frying pan into the fire as I have. So two, the Great Recession. If you've read our story in One Rental at a Time, we did okay during the Great Recession. But why did we do okay? Well, first and foremost, we didn't follow the herd. We stayed true to our numbers. We learned our market, right? When you think about One Rental at a Time and what I've done, the best thing I've created is my course because it highlighted for me when to get out. housing got expensive. So we 1031 into apartments, which were very cheap at the time. That saved us. And then we got aggressive. As prices went down and everybody fled, we got aggressive. We documented our success and we got access to private money. It was kind of a perfect setup. So again, it pays to be conservative financed. We could have certainly bought a ninth house with a teaser loan or whatever, but that wasn't for us. So learn your market, be conservatively financed. Don't be afraid to sell when others are buying. That really saved us in that event. And it saved us again in 2019 when apartments became the topic of the day and everybody thought they could be a syndicator and value add and all that nonsense. We sold and we sold to syndicators and we got a nice price and we're doing really well. So again, number two doesn't really affect consumers. It's basically, hey, stay engaged, stay focused on your market. When you think it's expensive because you watch it every day, sell or exchange, whatever you want. Don't jump around, conservatively financed. You got to hold for the long term. So that was number two. Then number three, this health event. Well, this health event has probably taught all of us that cash is king, right? Emergency reserve, the ability to weather this. If you haven't learned that having some savings to weather this, it's been said that 50% of us have been hit, our incomes have been hit by this. It has also taught people that it is good to cut expenses, right? Understand that you don't need those fancy shoes or bags or whatever, right? You don't need to flaunt or flex or whatever you want to call it. Also, in the real estate market, I do not believe we've had price discovery. The single family home market is so greatly reduced, although I do think listings are finally rising. And then in the commercial market, it's just too soon, whether it's office, retail, or apartments. Everybody wants to do something now. It's just too soon. And if you jump in early with imperfect data, you're going to make a mistake. Yes, I know you feel like you have to do something, but I'm not. So this one I think could change consumer behavior. I think people are going to save more. I really hope they are. I believe that will, like the Great Depression, be ingrained with some. I do believe that the high-end stuff is going to be hit hard, right? There may be some early, buying because people are just bored and they want to do something. But I think longer term, the high-end stuff is going to go down. Again, the consumer is an amazing thing in America, so who knows? I could be wrong. And then finally, I think there's going to be a lot of people wanting to do a deal for a 5% discount this year. And it's very likely, at least in multifamily, that you're going to have to wait a while. There's been no price discovery. I have never seen a larger delta between what a seller wants and what I think is valuable or what the price is. It's a double digit delta, and I'm happy to wait. So that's what I've learned. I would ask you to see what you've done. This channel, we follow the consumer and we follow the cost of capital. That's why I look at this daily financial news. So at the end, have a wonderful day. If you're coming back for the 8 a.m. session, I'll see you there. I have a long list of questions, and again, we will go for about an hour. Take care, everyone. Bye.